Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for the evening as we're here now on Wednesday, January 14th, 2025. And it was an interesting day today in that most of the stock indices, as you could see, finished the day lower. We did have the Russell higher. We're looking at bonds, BND and TLT tried to hold on. BND has been the stronger of the two. And again, we're down in Amazon, Netflix, Apple, Home Depot, RH. So we had a reprieve for a day or two, and then the market started letting go. On Netflix, they have changed their bid, and the word is that they're going to come out with a bid that is too good to refuse in terms of them calling for a board meeting to accept it if it's an all-cash bid. Now, at first, the market looked at it and liked that the stock wouldn't be diluted or they weren't giving away any further stock. But then as the market thought it through, the market reversed course on it. In terms of the news for tomorrow, let's go there for one moment. We're going to get the New York Empire State Manufacturing Survey for January. The Philly Fed Regional Business Activity Index is going to come out. U.S. weekly jobless claims, that'll be released at 7:30 in the morning. That'll be out. It's always a number that market looks at. U.S. November import export prices will be released at 7:30. Atlanta Federal Bank President Bostic, who seems to be speaking every day, is scheduled to speak again tomorrow at 7:30 in the morning at the Metro Atlanta Chamber Board of Directors meeting. We'll get the EI natural gas report at 9:30. Then we're going to get more bank earnings, and the ones that came out today were not good. So we saw that the earnings didn't meet up to where the market thought, and away you went to the downside, which worked with everything else. And I waited until 9 o'clock, wanted to see if the Supreme Court was going to say one word on when we're going to get news on the Trump tariff legality. Nothing came from that. So we sit here still waiting. That could happen at any point that the Supreme Court decides to release it, but they typically give you the big news on Wednesday, and we didn't get that. As you can see, Goldman Sachs, when I talk about the banks, they were down today, 548, $900 stock. It's not much of a break, so I'm just making mention of it. We see Boeing's been backing off from the 245 area. The other thing I'm looking at now is what is going on with Rivian. And a couple of banks have come out with sell numbers in Rivian where they think the stock can go back to between $16 and $15. Okay, I think it's great long term. I think the stock you want to own, let them fail if that's what you think they're going to do with their $45,000 smaller car that's due out mid-year. If that car is successful, it goes right into a beautiful gap. Yes, it's still an all-electric car, but that's a price point that is very, very important. And when you look around at that price point, because I'm looking for myself for another car now, and Rivian would be one I would definitely consider if it's got the range mileage and so on. I don't drive cross country, so the key to me would be to have that. And where I've moved, I'm seeing that there are chargers everywhere. Plus, I have a nice garage. I can put it in there very easily. So let's take a look at the markets and get a feel. In the emerging markets, I still like the chart action. I was hoping that we would fill a gap here, and that's what bothers me, that we haven't done that. But sometimes you just don't. In the pattern, you've got higher lows, higher highs. You see that here for the highs. That's bullish. When we look at where you're at in relation to the 18-day average, you're over all the key averages. So the only number for resistance is the Bollinger Band, which is up at 58.77. That's only $1 away. So it's not as though I'm screaming here, hey, you got to come into the market. You do have the embedded reading. The pullbacks are proving to be buy zones, and until the market loses the embedded reading, I very much like the long side of the market. When I look at the gap, okay, first of all, there's no gaps on the chart. That's the good news. Second, you've pulled back. You saw that Saks Fifth Avenue has declared bankruptcy. They're staying in business if they can. They're putting up their portfolio of real estate to try to get the job done. But the problem with them, with Gucci, with all these companies is brick and mortar stores are more areas that you go and look at something and then you buy whatever you can get the best price on from the internet. And it's been a rough thing. That is the way that it goes. If you go into Best Buy, with a friend, they'll tell you, oh, we're in the showcase for Amazon. And it is unfortunately true. So what you need to get from them is the best servicing, very good productivity and price. And they're there to stand behind it, because when you do buy from Amazon, the reality is you're on your own unless you buy a protection plan and you don't know who's coming out and things of that nature. When I look at Lululemon, today was the day that the market gave up for a moment. I said that you're caught in the upper and lower Bollinger Band. Said it here and on the rally. I said maybe it'll get back there. We had come from the upper band. I don't know what it's going to do here. The trend is down. The bias is now down. You're approaching, not there, an oversold condition, any reading under 30. And I don't like when you sell under a Bollinger Band, because you only stay under them 5% or over them 5% of the time. FedEx, you lost even with the rally now, and you've got to pay attention here. You lost the bullishness in the market, and you did not get it back today. So the market, in my theory, before it goes over this high, I'm going to look for the market to pull back to wherever the 18-day average, the $300 level, and that might become an interesting zone to come into the market. That assumes you don't first get over that high. Netflix, again, this is how the chart action went. The market tried its darn best to get up here to the 18-day average, as you can see. You had a 91.58 high, 92.06 was that number, and it just faded away by day's end. The bid for this, you've got people that like it, people that don't like it. We don't know if the government will give them permission to do it, even after whatever's voted on by either shareholders or the boards and wherever it's going to go. Turns out. In Uber, we're backing off. I don't think you're going down very deep. I like the 82, 89 level still in the market. Rivian, you heard what I just said. And, if you get down to the 100-day average, I might get very interested in the market. I can see arguments to like it down there. So, and I'm talking where you buy it, you put it away, and you're not getting rid of the stock until that car comes up. Has nothing to do with chart action. Do we understand that? In Joby came back as a chart action of making a new high for the move since all the way back over here. If you'll recall, you got up to 1710 here, 1658. So the market, you can see what it's done. It made the highest recent high. It pulled back, and now the big question is, what does it do with it? And there's nothing you should be doing, as I see it. In XLF, the financial sector, the market's been under selling pressure. It's gone from the upper Bollinger Band now to the lower band. It's done this before, and it comes back with a vengeance after it seems to do it all these times. I don't think this is going to be any different. So I can see reasons to short cover. I cannot see reasons to deploy new money on the short side. In XLI, I am just plain bullish. The industrial sector still looks fine. The chart's got a bullish embedded rating. It's running against the upper Bollinger Band. The bias is bullish as the market is staying over the 18-day average of closes. On the energy sector, I'm going to repeat. I don't buy into that this is a demand-driven rally. This is a rally that's taken place in energy from two sources. Obviously, we all know that data is going to be for the data centers. Utilities are under pressure to provide them. But the real thing that's going on is the markets are very worried between the U.S. and Iran. Does the U.S. move troops? And not to invade, but to attack again in a big way. The U.S. has now been found to be moving troops out of the UAE and other areas that Iran can attack. Not in the mass way that was done with the last attack on them, but an important way. And that has got traders thinking that we're days away from a possible strike. Yet Trump tries to throw you off guard going, he just heard that they're going to stop killing in Iran and they're going to do this and that. Who's he talking to? The Ayatollah? I don't know where it is. Don't trust our president. He likes to throw you off base. You know that. I didn't mean it any other way, but he's not going to tell you his plan. If you think back to the first time, he goes, why would you give your plan out? That doesn't make sense. He's shrewd that way. In the gold market, well, with the world geopolitical the way it is, with uncertainty about the US dollar, with the new inward look that the US has, gold just goes up. And the same is true of silver. Google, as you know, I love this stock. On hard breaks, it doesn't give us one yet. Hard breaks, in my opinion, will be looked at very hard by people that haven't gotten in. I am one of them. Microsoft cannot get out of its own way. I mean, when I heard AI and I think of Excel spreadsheets and all the other products that Microsoft has, the operating systems and everything, I'm going, boy, they got to be the big winner. That is just not the way it's turning out. I mean, here's the reality of this chart. Let me get this here. This market got up to 553, and now you're down $100 a share to the 457 level. I mean, that's almost $100. You're oversold. You're under the Bollinger Band. Is this going to prove to be a top area and the market continues down? Chart-wise, it's bearish, but it's oversold. BND. I want to remind you, we have our guide to technical indicators, volumes 1 and 2, which covers all these different parts, from the different chart patterns that teaches you that, what the different way to use trend lines are, the different patterns they'll create. It's a PDF. It's going to cover moving averages, everything, as you can see, with beautiful examples showing how to work with it. Oscillators are like what I use, slow stochastics, to give you an idea. Some people like market sentiment. Other people like Dow, Elliott, Fibonacci, and Gann. They're explained and the ideas behind them. Spreads. Why do people trade spreads? Carry. Are they going to narrow or widen? Price-time relationship, called the Arun indicator, another way to look at it. And of course, big trading for option that you have in there. And we have the primers on it along with money management. So if you'd like to get all this, it's absolutely free. You go to iraepstein.com, look on the left, free offers. You can move your cursors up here. You'll be able to get to it. And over here, if you're watching us on YouTube. I'm Ira. While you're there, take advantage of the other offers that we have, and I will talk to you all tomorrow morning and in the other videos tonight. Take care.